Well, investors are really unhappy with Telstra. Another 4.2% down today makes it nearly 7% in 2 days since the trading update and the plan to sack 2,800 people was announced, which is more than $2.5 billion off Telstra's market value. And that's rather a lot more than the company will save in annual salaries. The other happier news today was a 7.7% gain by Webjet after it foreshadowed a demerger, separating its hotel and flight booking businesses. Stocks in New York and Shanghai went up today and last night, but fell in Tokyo. Iron ore and aluminium went up quite a lot on commodity markets, and the Australian dollar is up very slightly at 66.7 US cents. IFM Investors published this chart today comparing the current decline in per capita household spending with the recessions in the 1970s, 80s, 90s and the GFC. Now, this one is already as deep as the GFC and worse than all those other recessions. But if the Reserve Bank's forecast comes to pass, it'll be by far the deepest household recession. And the only reason it's not an actual recession is that immigration is holding up GDP. And finally, here's where we're at with working from home, at least in Melbourne and Sydney. CBD office vacancies in Sydney are 14.3% and in Melbourne 18%. Now, in both cases, they're well above average and the highest they've been previously for decades. And that's finance.